And we're back with the Texas Oil and Gas Podcast. We appreciate you tuning in to today's episode. This is episode 199, one less than 200. I'm your host, Josh Shelton, and my friend and co-host, Ryan Ray. Ryan, one more episode will be at 200. All we need to do is double the episodes with 5-star reviews,
Yes.
and we'll have a good 2021.
That's right. We just need to get to 400 5-star reviews, and we'll be on our way. I was talking to someone yesterday who was listening to our show and said, I haven't given you guys a review yet. I'm like, let's get that done.
That's the problem.
It takes like 3 seconds to click the 5-star button. It takes like a minute to type in like Ryan's the greatest and Josh is marginal. Like that's
Yeah, well, if we hit 400, we got to bring Nate back on to do another polar plunge or something.
No, that's not carried away. Nate can come back and do the polar plunge.
That's what I'm talking about.
Okay.
I'm staying dry. I don't want no more of that.
Yeah, well, it's good to have you back for your pre-Easter Monday day off. So,
hey, I was thinking actually that you may be taking off today. Your wife told my wife that you were taking off this week. So my wife thought we didn't have a podcast this morning, and I told her, I was like, no, I don't think that's the case.
Brett Favre podcasting right here, son. I'm here. I'm here, baby. Unless I'm in China, I'm here. So.
All right, Ryan. Well, we got some interesting news that came out today. I had something that was going to go in M&A, but kind of a big deal. So Pioneer is going to buy Double Point for $6.4 billion Permian deal. So what does that say about the state of the industry in the Permian? What does that tell us? So that's going to be something we want to look at. We got a couple articles from one's from David Blackman, and the other one is from Ramsden Wood. So it's two Davids there, Ryan. I almost got tongue-tied.
Yeah.
All right, so
go ahead.
I was about to say, so the news came out. I mean, it's hot off the press this morning. Pioneer buying them for $6.4 billion. Oil sitting over $60 a barrel right now. People are starting to be optimistic about what's going on in the Permian. So I mean, this hopefully is an indicator of more activity like this coming in the coming months.
Yeah, that's kind of the question, right? Is this kind of the early ripple effect, the forerunner of a lot to come, or is it just a one-off deal? I know Blackman and DRW are both kind of high on this deal. Blackman talks about Pioneer kind of consolidating, and I think that was DRW's take as well, is the consolidation in the Midland Basin for Pioneer. And so, it's a thing that you look at and you say, well, first off, $6.4 billion is a lot of money. That's a lot of money. So, I'm not going to weigh in on whether or not this was a good price point or not. I don't really know that. But here's what I thought about. Think about the Oxy deal with Anadarko, right?
Mm-hmm.
And so, how much was that deal for? Do you remember?
Oxy and Anadarko was at $55 billion.
Let's see here. Oxy,
I'm shooting from the hip.
Oxy, what? Oh my gosh.
$57 billion.
$57 billion. Okay. $57 billion. All right. And that included that's including the $10 billion or whatever it was, Chevron go away money too, wasn't it?
$1 billion.
It was
$1 billion, yeah. Chevron go away.
So it's a big deal, but relatively speaking, it's not like these huge deals that we've seen in the past. And so kind of the conversation has been at the time, remember Icon was all mad at Oxy for buying and this, that, and the other.
Vicky Hollop, yeah.
Right. So this one is kind of interesting because as we sit here right now, WTI is half 60, it's around the 60 mark. You go, well, what is going to happen the next year and a half to 2 years? Because that's kind of what got Oxy, right? So if Oxy would have known that the pandemic was coming, they probably wouldn't have bought Anadarko, obviously. So what is coming around the corner? And right now it's interesting because I'm not entirely sure that we can be too confident in what's going on. If you look at there's renewed lockdowns and stuff in Europe. So the price is the we don't I don't think we're talking about this today, but the Saudis and OPEC are putting more oil back on the market. I think it's 2 million barrels by the end of July they put back on the market. So they will be increasing their production. Of course, you have the demand increase, hopefully, that will come along with summer. So you have all these things. And so the all I can take this to mean is that either A, Pioneer believed that this was such a good value that it didn't matter if the prices stayed low. Maybe their production's hedged and so they get it at a set price. Or that Pioneer really believes that things will pick up. Break evens are low. I don't know. To me, it's a sign that Pioneer feels pretty strong that the next 12 to 24 months, things will return back to some level of normalcy. That's
Yep.
I can read it because I'm not optimistic that we're going to get back there in 12 to 24 months. Maybe we are, maybe we're not. I don't know. It just feels like every time we think we're past the COVID stuff, man, you see something new come out. You're like, God, dog, like come on, let's get past this thing and go on. And so that's kind of my read on it. The Pioneer must feel pretty good that prices will stay level. They're not worried about the Saudis or OPEC or OPEC Plus or whomever crushing the price again. And so will that spur on more deals? We'll see.
Yeah, so I mean, surely they knew that they were going to get tore up on the stocks today because I see here they're down $10 on the day, down 6%. Um, any sort of merger or acquisition is just getting torched on the stock side, and it's been doing that for 2 years now. So maybe it's just a slight inconvenience because they believe that it'll right the ship. But surely they knew this was going to happen. A lot of the people that are investing in stocks are going to be wary of this. So they have to see some value because I mean they knew that part was coming at least. So yeah,
If they believe in the deal, right, the stock gets hammered. They just buy the stock at the low price.
right, yeah. That's the thing.
So,
Pull the icon. End up on the chair seat. Yeah. So what, David Blackman. I mean, what do you think his take is on the Pioneer deal? I mean, does he think it's a
yeah,
a good deal?
Yeah, and it's consolidation of the Midland Basin, and so kind of makes them the big dog in that part of the Permian, and so you have this Pioneer who's kind of created themselves a more expansive play in that part of the Permian. So we'll see. I think where I'm at, just kind of looking at these things right now, is it's kind of hard to, going back to 2019, going to 2020. I know me and you both felt like prices were going to be pretty decent, and then everything was going to be kind of smooth sailing relatively from that there on because the companies that were in trouble would kind of would be able to survive and move forward, right?
Mm-hmm.
It didn't happen, and so now we're kind of back to where we were in like 2016, trying to figure out who's doing what and who can survive and where are they going and so it's for me it's a little bit early to be overly optimistic and the reason I say this has nothing to do with oil and gas companies. It has to do with how the rest of the economy is working. And you look at some of these you look at the real estate market, you look at tech stocks, you look at all these things and it's like, man, so I'll give you an example. The CDC extended the moratorium on evictions until the end of June for renters, right?
Mm-hmm.
According to the survey, 20% of all Americans, or 20% of people surveyed, rather, that are paying rent are behind. The 20% of renters are behind, right? So, how? No, I don't know how many landlords that is because it could be more or less depending on what's going on. CNBC put in the article that was part of Biden's effort to stamp out the coronavirus. The extension of the moratorium on rental evictions. Okay, well, that has nothing. One thing has nothing to do with the other, right? What's happening there is that the Biden administration realizes that the economy is not that strong, and if you lifted it, all these people would start getting evicted, and that wouldn't look good. Then you start seeing the cracks in the economy. So when you look at something like that, that's just one data point. There's obviously a lot. You look at something like that, it's like, okay, well, what is really going on here in this economy? How strong is it? How close to rebounding is it? I don't know. So I'm still a little gun shy on what's going to happen. And oh, by the way, if demand does pick up, what will OPEC do? So, so obviously, I know Blackman and DRW are very high on this deal. Maybe it works out good. I'm just a little bit more hesitant to say that anything's good right now because we can't get out of the woods, it seems like.
So just for perspective, Pioneer actually bought Parsley Energy for $8 billion about 6 months ago in October last year. And based on what it's showing here is like you said, is consolidation. They're getting huge uninterrupted spaces where their possibilities for scale are much higher. So based on what Ramson Wood said, is that the folks that are going to be successful in the Permian are people that can get more acreage and do more at scale, so that they can take those small savings of being able to do such large projects and use that to create better margins. So that's kind of what Blackman is saying here as well. So from the perspective that if you're going to do the Permian, the little guys aren't going to be able to make it anymore. Essentially, it's. And I'm not saying that as a fact. I'm saying that's what seems to be indicated here. That transitioning to more scalable, bigger acreage projects is going to be the way forward in the Permian, and the other guys are just going to have a hard time keeping up.
Here's something that I haven't seen anybody address, Josh, is that let's go back to last year. Sheffield was one of the ones, the Pioneer CEO. He was one of the ones kind of pounding the drum for the Texas Railroad Commission to step in. Remember that?
Mm-hmm.
And so is Pioneer consolidating, obviously for some of the reasons that you mentioned, but also how much of their growth is incentivized to push for regulation that then ultimately helps them as well? Like, I don't think you can look at them as a free market, a truly free market company anymore, because they were really pounding the Texas Railroad Commission for, rationing, or what was the word I'm looking at here? Making people cut. And ultimately they didn't even cut, just to be clear. If I'm going to double check me, but I'm pretty sure they didn't even cut, even though they were pounding the TRCC to cut to make it mandatory. So I think that we have to remember Sheffield's history is on some level to push for regulation, even if that regulation isn't something that actually he ultimately wants to deal with. So are they consolidating to be able to be obviously not going to be Chevron or an Exxon, but kind of move up that ladder and then call for regulation that they can benefit from and cut out some of the smaller players? And I think they did the same thing with flaring, right? Weren't they the ones that it was a Pioneer who was doing with flaring, where they were like, yeah, if you're not flaring, then you shouldn't be in business. Shareholders should leave you. Wasn't that them?
I think so. Yeah.
So I think that has to be kind of in the back of our mind here, is that maybe these aren't, maybe there's money involved, but maybe it's also, the ability to throw their weight around a little bit more.
Yeah. Well, I mean, their stock price has been going up. I mean, based on what I'm seeing, is it's went up tremendously since last year. They've continued to rise. I mean, they're up, I think, 155 right now. Last I checked. So
everybody's but Oxy's. I bought Oxy and it went down.
Yeah.
Yeah. I bought theirs. I was like, yeah, okay, Oxy's back, and it went down. I was like,
oh, So Ryan, I think there's we've been talking about the power outage that happened here recently, and we had the guy on to kind of talk about it. But right now, there's people that are defending the oil and gas industry, and there's some people that are blaming it. This article is out on April 5th, and right now, a lot of people on the TRC, the Texas Railroad Commission, are blaming renewable energy power for the outages. I don't know if that's quite fair to blame the renewables, but I think they're trying to point the blame anywhere but at themselves. I mean, there were things that could have been done even by the TRC that I don't know. I wonder. I'm sure there's some shared responsibility between a lot of the groups, but certainly you can't go out and just blame the renewable energy. It's got to be the legislators that push for that agenda, possibly, or something along that vein to capture more of the people that were behind the energy push. It's not the renewables themselves that were the problem.
You're right, because renewables in some parts of the world,
work. They're in very cold weather.
Right. Yeah, and this goes back to, I keep pointing this out, and no one really takes me up on it, but when the power company is not responsible to you, the consumer, this is what you're going to get. You're going to get the this group saying this and that group saying that and these groups saying this, and they're all just kind of fighting each other. And then at the end of the day, you're like, wait, hold on, what? And I can't remember. And how does this work? Because no one is actually responsible. If the legislator ain't responsible to me and you, we know that. That's obvious because they ignore us. The power companies aren't responsible to us, and all these other groups aren't responsible. No one is responsible to the average American or average Texan in this case, average citizen. And so all you get is this a bunch of he said, she said, and you got to spend hours kind of reading through different sources and trying to figure out, well, why wasn't it winterized? Oh, because of this policy here. And well, then you got to think, well, okay, if that wasn't the case, then what are some other options? And so you just get to the point like, screw this, man. You know, you kind of drive your stake in the ground and you go on about your business. And then you're like, well, who's going to fix this? Well, at the end of the day, no one's going to fix it because no one's responsible. Like no one is responsible. And that's what I've been saying from day one. What should the liability be here? And there is no liability. And so we're never get this solved. We either will we will do something that's either more akin to what other states do, and maybe we'll make more regulated. Okay, that's an option. Maybe we won't regulate, and then they won't winterize. At the end of the day, unless you're responsible to your customer, you serve the wrong master. And that is this business 101. That's just business 101. The reason that the government programs by and large suck is because they're not responsible to their customer. They're just not. Josh, when we're in business, we're responsible to our customer. So if we don't do a good job, what happens? They fire us.
Yep.
These organizations, these legislators, these groups, they're not responsible to the customer. And so, or the consumer, whatever you want to say. And so because of that, we're sitting here going, well, how are we going to fix these problems? Well, these yahoos aren't going to do it.
No, they're not. They're just going to point, blame, move on.
Yeah, right. And so you're sitting there like, well, what is it exactly that you guys? What are you going to do? How are you going to fix this moving forward? And so what's nothing? They're just going to talk about it. They're going to roll some policy, and then guess what? The next time something bad happens, what they're going to say is, "Well, we had this policy, or we didn't know about this." And I think it was Blackman. He pointed out that there's some form they could have filled out that could have fixed all this, and it's like, guys, I mean, no one's accountable, and they never will be. That is the way the system is designed. It's designed so that the politicians are not accountable, and when they think they are, guess what? They start making promises and all kinds of stuff. So I sit here and go, it's not even worth following because it's just wasted your time, right? I mean,
Nope.
Talk about it. We can kind of say this, that, and the other, but until they're responsible to the people they serve, there will always be problems. And if you doubt me, just go to the DMV and tell me how it works out for you. Go to the post office. Go to somewhere where they don't go to the post office and go to FedEx. Like it's just not the same. It's not the same.
Yeah, much different. Speed, service. Yeah, it's just a whole different ball game.
Indeed.
Is our guest here?
Not yet.
Okay. All right. So another deal that I want to talk a little bit about was Enverus acquires Denver-based renewable power data firm. So they're going to integrate Denver-based Energy Acuity, which has tracked and cataloged thousands of renewable projects. So Enverus has been collecting a lot of data over the last 10 years, especially since 2016. Lots of acquisitions. So moving into this renewable space, I think signals that they're aware that this might be a necessary thing for them to do in order to, I don't want to say remain relevant, but the oil industry may not be getting the best press. And so this helps a company like this to enter into a space where there may be more government money flying around, especially with all the printing and what's going on now. So I think this was a wise move on their part, and I think it'll be something that they'll continue to pursue here into the future.
So you like this, huh?
Yeah. Well, I mean, I think that it's only good because of the government incentives that's going to make it good. But I do think if I'm in Veris, I'm doing it. I would do it.
Yeah, I wonder. I mean, I think you know, the changing the name from Drilling Info, I don't really care about one way or another.
That was dumb.
But you do have to wonder. It's like the ESG stuff, right? So it's here, something we have to deal with. You have to wonder what their motivations are now. Are they here to serve an oil and gas industry, or are they here to try to placate both sides of the aisle? And I'm not saying a business can't do that. I just wonder what their strategy is, and will we be talking, a year or two from now and going, well, yeah, man, remember when Inveris was an oil and gas kind of group, and now they're kind of anti oil and gas? Or I'm not saying they go that far, obviously. You look at this and go, ugh, I wonder how far. I wonder where this is going. It's a little concerning. I have heard from people that are frustrated that are landman with their landman portion of their software. They say that they feel like they've kind of abandoned that. Now, I don't use their software personally, so I don't know. This is just hearsay, so take it for what it's worth. It might be the best stuff in the world. I have no idea. I'm not mad at anybody for making a buck. We're capitalists here, so maybe there's more money in what they're doing now, and I would suspect that's the case. But I think it's just something to follow, more or less.
Yeah.
Hopefully, listen, Drilling Info is a great partner to the industry for years, and hopefully that will be the case. And hopefully they will continue to serve the industry in a good way. But we're in a tough spot, Josh, because how do you deal with environmental responsibility and in a way that's the right way to handle it, which we've argued for some time is by taking care of the landowners, right? Like that's the primary way you start there. If you do right by them, you can fix a lot of problems. The climate change stuff and the flaring and stuff like that, there's a problem there that you have to deal with. And so, how do you walk those things? And they hit the ESG. So I don't know how these companies navigate these paths. But it would seem like if you're a data analytics company, and listen, we can have on some from Inveris to talk about this if they want. If you're a data analytics company and you're trying to find ESG companies, you're going to push investors towards some companies over others, whether the returns are as good or not, right?
Right. Yeah, exactly.
And so you might have Shelton Oil and Gas, which is really profitable, and Ray Oil and Gas, which has all this ESG stuff, and you're not telling your investors about Shelton because you're trying to push this narrative. And so, ultimately, you might have less efficient companies or less profitable companies because of that. And so, is that good for the industry? Because if I'm less profitable, I'm be quicker to pull the ripcord. So who knows? I don't know. So I'm not trying to trash them. I don't know. Always been nice to us. You see this, you go, I don't know. Where are we heading?
Yeah, well, what I was going to say is, from a lot of the oil and gas folks, moving from Drilling Info to Inveris was a dumb move. It seems dumb, but if they're trying to open up to not just be limited to oil and gas, but opening up to a wider energy industry, Inveris certainly makes a lot more sense. If you're trying to open up into those spaces, yeah,
absolutely. Like if we wanted to start talking about renewables on this podcast, we wouldn't be the Texas Oil and Gas podcast,
right? Yeah, we'd have to
Texas Energy podcast.
Yeah, you'd have to pivot. So I think part of what they were doing was pivoting because they saw the ESG issue. It opens them up where they can have better reception, from a stock standpoint or going, public. Just depending on what their strategy is, what they want to do. The name change certainly helped open up those opportunities. And I'm wondering too how they're gonna position themselves in relation to the oil and gas industry. I'm curious, and I don't want to assume anything too soon. I think right now they see opportunities in renewables, which if I'm them, I take the opportunity and I try to maximize it. If there's an opportunity in oil and gas that comes up, I think they're going to take it then. I think in any way where they can capitalize with better data than what's being provided by other sectors, take it. I mean, it makes sense.
Maybe we should say it like this. We are on this show energy agnostic, right?
Yep.
Whatever works best at the best price, whatever works is what we're for. and we're willing to defend oil and gas because we believe that that is the best in a lot of cases or whatever. I think the question that we're posing at the core of it is, will Enverus have that same stomach?
Yeah.
Will they be ones to stand up ultimately and say, no, we really believe in the utility? Because as you go into these other industries, it's not popular to say that oil and gas is essential for life. It's not. And so will they have the backbone to continue saying that? And I hope they do. They've been a great partner to the industry for many, many, many years, long before I was in the industry. And so I hope that that's where they're going. And maybe they can be a bridge company to the renewables, to the ESG crowd, while doing a good service. But it wouldn't be the first group we see go by the wayside. So we shall see.
All right, one more for the Texas Roundup, Ryan. Canada's Whitecap Resources to buy Kicking Horse Oil and Gas for $300 million. This isn't the big billion-dollar deals, but still something to take note of. So Canada's Whitecap, obviously, they see opportunities in the industry that may provide an opportunity. So still some optimism in the nature of the industry.
All right, Joshua. Well, our guest was a no-show today, so that's how it goes sometimes. So we'll wrap it up there. Episode 200 next week. Wow, that's crazy. So we are on spring break this week at the Ray House, so that will be fun. Looking forward to that. And to everyone, have a lovely week. Leave us a 5-star review, even if you don't like Josh. It's okay. And until next time, keep climbing.